Morning, everybody. 6:54. What's this? The 16th of February. So pretty soon you'll be getting your T4s. Some people have them already, but you'll get them at the end of this month at the latest, and then tax time will be here. So is Cleo Hamill from H&R Block. How are you?
Good. How are you?
Very good. Very good. Very good. I notice one of the things when you get your what is it called when after you do your taxes they send you some information?
You get a notice of assessment.
Notice of assessment. And in there, it will tell you how much room you have when it comes to RRSPs.
Right.
I have a lot.
So do I.
Yeah. I could take like about 2 years' salary and put it in there right now.
Well, see, that's an incentive right there.
Yeah. But you know what? It is a great incentive if you have room like that. Nobody's saying you have to use it all up. You don't. But if you use some of it, you really reduce your taxes payable and that sort of thing, right?
Well, and I think that's the main part that people need to understand about RSPs is that's what it's doing. You're actually reducing your taxable income. So if you put $1,000 into an RSP, you actually get to deduct $1,000 from taxable income.
Yeah.
Depending on where you are in the country and what your provincial tax rate is, but you'll save a minimum of $150 in federal tax.
Yeah.
For every $1,000. So it's good to know.
Not only are you helping yourself in the long run with money put away for your retirement and so on, but you're actually going to get more, in fact, get more money back or reduce the amount you owe at the end of the whole scheme, right?
It's beyond what you would normally do. So when you get your T4 at the end of the year, if your employer was withholding the appropriate amount of tax, when you do your tax return, you should come out pretty close to zero.
Yep.
But we usually say, $100 give or take. We're conditioned, we want to have a refund.
Yeah.
So putting money into an RSP is just that added incentive there.
That also applies, when you do a monthly or whatever withdrawal at your bank to put in, into a fund, a recognized fund.
Right.
When it comes to that sort of thing. So if let's say if you put $250 a month in at tax time, make sure you use that to reduce those numbers, and you'll get money back on that too.
You will. And there's a couple things to consider. If you're just starting out for the first time, right, you may not have thought about this. You might be in a position right now saying, I don't have any money. Banks are giving out RSP loans. Take advantage of that if you can.
Yes.
If you've done the loan and now you're thinking I need to move on, start making monthly contributions, whether it's $25 a pay or $100 a pay. Start doing that, and then at least you've got the whole year's worth. And every year then you can gradually increase that.
Yeah, I often say to people, I wish I'd have done that as a younger man, because once you get used to the idea, it's money you'd never miss.
Absolutely.
Right? And then it's in there, and then you start looking at it and you're going, wow,
well, and
a lot of dough.
The problem too is if you have extra money, the question is, I'm not quite sure what I should be doing with it. I have other things I need to do. Put the money into an RSP, take the refund that you get from it, and then do something with that.
Yeah.
So if you want to put that into a TFSA, maybe you want to use that to pay down your credit card. I know it's not going to be as much, but it is still being able to do two things at the same time.
Yeah, and you can reward yourself by doing that. If you get an RSP loan or you make a lot of contributions regularly over the year, you will see a benefit from that, and maybe that's when you take your trip or you do something for yourself that you want to do with that particular refund. Yeah.
Well, and like I say, if you're going to be planning something like that, at least make that initial step of doing the RSP contribution and getting the tax advantage from it.
Yeah.
If you can put the money into a TFSA then afterwards, then that's the account you're going to use to plan for the holiday or the car or whatever. Yeah,
the limits when it comes to RSP contributions and so on are quite easy to find out about. There's really no mystery surrounding that, right?
No, and it's been around for so many years. It does change on an annual basis. It's usually based on 18% of your earned income from the previous year.
Yeah.
The maximum for 2011 to do on your 2011 tax return is $22,450. Next year, going into 2012, it's going to be $22,970. But you made a really good point. It's your notice of assessment that tells you how much you personally are able to put in.
So I'll be putting like tens of thousands of dollars.
Statistically, they're saying that the contribution this year is going to be around $4,700.
Is that right?
Yeah, and probably around, 45% to maybe 60% of people actually put money in.
H&R Block can answer a lot of questions about that if you have questions, so keep that in mind as we head into real busy tax season. When those T4s come out?
They're supposed to be out for the end of the month.
Yeah, it's madness.
It is.
Madness. Don't delay. Thanks, Cleo. Good to see you again. I'm sure we'll see you soon. I'll tell you what, a fatal crash is being investigated today in the Bells Corners area. We'll have details on that coming up at the top of the hour. There's your lineup for tonight. This is CTV Morning Live. We'll be back with Hour 2.